It's 6 o'clock in London, it's 1 p.m. in New York, 1 a.m. in Hong Kong, 3 a.m. in Sydney, 10 a.m. in San Francisco, and 10:30 at night in Mumbai. The horns are cheering in the background, ladies and gentlemen. They're obviously marking the fact that this is the last IPO-VID of 2021. Greetings, good morning, good afternoon, and good evening, depending on where you are in the world today. My name is Patrick L. Young. The IPO-VID livestream, Series 9, Episode 1, that makes it episode 49, starts here. 300 million, that seems to be a good number for the number of the week. No, it's not a percentage metric of how credible Formula One motorsport looks this week after finally going down the route of becoming wrestling on four wheels. Nor is it the latest inflation rate, thanks to Joe Brezhnev spending so much money that he's already coming close to running out of other people's money, as Margaret Thatcher so memorably described socialism. Nor indeed is the number of people who are going to die of Omicron in the UK remotely close to 300 million. That's largely because, thanks to the same government statisticians, I think the whole of the UK is already dead. Actually, 300 million, that's the fine in US dollars for NatWest Bank. Yes, the UK bank was successfully prosecuted this week for some quite spectacular money laundering. Who could have guessed it, ladies and gentlemen? If you have a jeweler who has a turnover of, say, 15 to 20 million a year, and then they keep consistently banking $1 million in a day in cash, yes, 1 million per day in cash, that somehow or other might not be appropriate for the local bank branch. All this and more has already been covered in greater detail in Exchange Invest Daily, the unique newsletter of the Bourse Business. Send us an email or hit me up, Patrick L. Young, on social media via whichever stream you're watching this, indeed. And we can get you signed up to understand the exchange business. And indeed, understand the exchange business is something we're going to be doing spectacularly over the course of the next hour. Our guest today is Jos Schmitt. Jos Schmitt is truly the original serial exchange entrepreneur. He's co-founder, president, and CEO of the NEO Group of Companies, a FinTech organization that includes the NEO Stock Exchange, as well as a technology arm providing a multi-asset distribution platform for mutual funds and private offerings. Prior to the NEO Group, Jos formed, together with a number of blue-chip financial institutions, the Alpha Group, serving as its president CEO, and that included the Alpha Stock Exchange. This followed his role as EVP, Head of the Americas and Global Head of Capital Markets for a global professional services company focused on the financial services industry. His vast experience includes President and CEO of a European derivatives exchange and clearinghouse, as well as a pan-European Indices Publisher, and also Chairman of a Derivatives SRO. That's just a very headline glance at what Jos Schmitt has managed to do in a spectacular career. Today's topic, Jos Schmitt, serial exchange entrepreneur. IPO-VID starts now. Leave us your questions on social media, wherever you're watching this, on Facebook, LinkedIn, or YouTube, ladies and gentlemen, and we'll be answering them during the course of the next hour. Jos, it's absolutely a delight to see you today. So, where in the world are you today?
Well, right now, Patrick, I am not in Canada, as you would probably expect it to be, and I hope that you can hear me well, because there's a little bit of a delay in my video stream here. But I'm in the UK, and more specifically in a beautiful area called the Cotswold, which is north of Oxford. And just think about those incredible Christmas images that you always see when you come to the UK, with those houses covered with snow. Well, that's where I am.
Well, that is quite a surprise. There was me perming from presumably somewhere in Canada, perhaps your skiing lodge somewhere in the mountains, or possibly you were in Chicago visiting the good folks of the Chicago Board Options Exchange, SIBO. And there you're in the Cotswolds. What a dreamy and delightful place. Indeed, you can create your very own, one of those Love Actually kind of romantic rom-coms for Christmas, perhaps. Something like that. Great to see you anyway. So, Jos, tell us a little bit. I mean, give us a little glimpse of what it's been like in your career, because you have been truly the serial entrepreneur in the exchange business for, good grief, what, 3 decades now?
Yeah, sadly enough, it's already three decades, as you say, and it has been 30 years that passed by at incredible speed. And how does it happen? How do you get into it? It's always hard to explain. I think that it's probably a bit the result of working at a consulting firm. That's where I started my career, and then being suddenly exposed to a large project with a stock exchange, and really getting excited about it, getting excited about that entire capital markets environment. And when one of the things we were looking at was the launch of a derivatives exchange, I just took my courage in my hands, and I went to the chairman of the stock exchange, who was with a number of banks co-founding that derivatives exchange, and I said, "I'm interested to be your CEO." And they had a couple of discussions because there was a search taking place at the same time, and they said, you know what, you could be the right guy for that, and they asked me to take up the job, and that is how it all started. And the funny anecdote around it is that I was 28 at that time, so not with many years of experience, but with some good experience in understanding markets and understanding technology, which are both very important when it comes to the exchange business. And then things move on, and other opportunities present themselves, and it took my career both as a consultant. You mentioned another phase of consulting in my life, where I was involved with many exchanges globally, in Asia, in North America, in Europe, clearing houses, and so on. And then moving back again in the exchange world itself. And, we always laugh about consultants. They tell you how to do it. I managed several times to explain how to do it, and then being put in a position of having to do it. And that is still quite different. Oh, I lost the sound, Patrick.
Sorry, I'm muted at the moment. I'm terribly sorry. There seems to be a little riot going outside. I do believe we've got the president of Malta actually going past in his motorcade, which is one set of sirens. He doesn't carry 128 vehicles like Joe Brezhnev, which is just as well, because if he did, he'd never actually get anywhere, because he'd be, the whole motorcade would be a quarter of the length of Gozo or something. Anyway, sorry for the interruptions, ladies and gentlemen. Really interesting stuff. Good evening, Craig Richardson. Lovely to see you again on the show. And good evening also to Simon Huckle. Delight to see you with us this evening. And Les Calvert. Great to see you as well, gentlemen. I hope you enjoyed the show. Do please drop a question to Jos as you go through the interesting insights that we're going to be looking at this evening. So, Jos, I mean, you have this career. You get into Belfox, the Belgian Futures and Options Exchange. You create it, you're the chief executive and so on. What had you actually been doing precisely before you did that?
Well, a couple of years, what was it, 3-4 years, probably 4, because my career is always in phases of 4 years, believe it or not. And it seems to have been continuing like that. And 4 years means, not necessarily leaving in 4 years, but also every 4 years reassessing, am I gonna recommit for another 4, and then it becomes 8. But so the beginning was with a company known today as Accenture, and now you're gonna see the 3 decades emerging. When I was part of that organization, it was still called Arthur Andersen Consulting, not even Andersen Consulting, and that is where I learned the ropes of the business, coming from university, being a little bit probably arrogant, knowing things better, and then being put in a situation with a firm like that, where I realized I still had a hell of a lot to learn, where I realized that discipline is very important, where I realized where listening is important. And I got involved in strategy projects. I worked on a project for a large steel company in Europe. I worked for an insurance company. I worked on some other projects, and then I got involved in the automation, the electronification of the Brussels Stock Exchange. So moving from a pit to a fully electronic trading system, and that is, really where I got the taste and the interest into the business. And for those who may remember, the system we were implementing in those days, which was quite successful in multiple countries, was a system called CATS, Computer Automated Trading System, and shows you the circle. That was a system that was being used in those days and that had been designed by the Toronto Stock Exchange, which is quite funny when you think about where we are or where I am today.
Yeah, so the irony, I mean, you're not referring to the Cotswolds there in terms of where you are today. You're referring to the base that you've built up in Canada. So let's jump through the narrative a bit. I mean, you got to Canada and you find yourself with this opportunity. What exactly led to the whole concept behind the original move to create Alpha?
Yeah, the move to Canada was driven by a large project in the consulting firm I was part of, and that I was running and was operating in Europe at that time. So a big project. They asked me if I would be open to come over. Big automation of the entire middle and back office of a bank. And I was supposed to be there for a year and a half, and then in the process, in that period, another project came up, and that was to do an assessment of an alternative trading system, because the issue in Canada was that there was no competition to the TMX. And a number of financial institutions said, we need competition like we see it in the US. We need a mechanism to put pressure on price, to improve service, to get better service. And they asked me to do an assessment and provide them with a plan. And then when all of that was done, it's funny. It takes you back to what happened in Brussels with Belfox. They said, well, now we need to find a CEO, and then it was in this case the other way around. They came to me and they said, would you be interested to do it? And it was like a tough decision, just because of the foundational role I also played in the consulting firm I was part of, which by the way was called Capco. And but ultimately, somewhere in my blood there is that love for operating exchanges and also being a disruptor, because when you start from scratch in a well-established environment where you have a strong monopoly, you are a disruptor, and it's something I enjoy. It's something that I love, and disrupting for the good, disrupting to make things better. And I think we did a very good job with Alpha.
So that actually does raise the fascinating question, because I think many people watching this evening may not remember the Alpha value proposition. Just remind us of what it actually did and how it filled an interesting niche in the Canadian market space.
Yeah, so if you look at the activity in Canada, or the exchange activity in Canada, it was all concentrated on the Toronto Stock Exchange. So there was what was it? I would say probably 95, not 99% of the volume was taking place on the Toronto Stock Exchange and its various markets. GAIX was looking at launching something, and I think they launched something just a few months before, a few months after us. There was an initiative around an organization that is now the CSE, but it was not showing any tractions, and there was a view that we need an organization that is going to come with a very efficient, quality technology platform to support trading, that would come with mechanisms to enable new types of market participants. All of this happened in 2007, 2008 is when it was launched. There was a view around all the value that those liquidity providers, high frequency traders could bring to the markets. They were not in Canada at that time, but you needed to have the right technology. There was a view that the costs were far too high. There was a view that market data cost in Canada was far too high. And then we came with that alternative, and we came with different models, different ways of trading, leveraging the quality of the technology, leveraging different fee models to put a competitor in place. And what we saw is that we started to take substantial market share away from the TSX and the TSXV. We saw that we put pressure on the business model. Cost of trading in Canada went down in a very meaningful way. New liquidity was injected in the market, and that is what we were looking for. But it's always the same. If there's no competition, there's no progress. And I think what we did is bring that competition into the Canadian market. And I also believe that in those days, the views of the TMX were initially, whatever, you're not going to take any volume away from us. Everyone's going to continue to operate with us. We need to change and we need to adapt. And they did, but they only did it, in the trading space, because that was the only space where there was competition at that moment with Alpha.
And that's very interesting because, of course, actually, I mean, the Canadian marketplace has had some fascinating experiments. I mean, the Canadian marketplace experiment was one amazing, I think that was what it's called. I mean, where they took all the cash market into Toronto, and Toronto paid Montreal, was it 50 million or 100 million Canadian dollars, and handed them the derivatives to take it away and presumably junk it. And then they ultimately paid, I can't remember what the number was, but it was 860 or 1 point something billion Canadian dollars to buy it all back again about 10 years later, because actually Montreal had managed to make such a great business out of it. So there is possibly an argument that, certainly looking at the history of the Toronto Stock Exchange, it might have had a few issues where it maybe didn't happen to have the most forward of thinking of certain aspects of its management. And I say that, of course, because remember one thing. First of all, my great-grandmother was actually Canadian, and second of all, the vast majority of people who actually have been on the board of the Canadian Stock Exchange, or at least the Toronto Stock Exchange for many years, tended to all be people who came from around Northern Ireland, where I was, Canada being a place which had a greater exodus of people from Northern Ireland than any other part of the Americas in terms of Ulster's exodus to there. So anyway, it is interesting though, as you say, so you created Alpha, you created incredible value. You sold that on to the TMX, as by that stage it was, Toronto Montreal Exchange, and you got to this idea of NEO. Now, NEO, I think, is really, really interesting. So walk us through that, please.
Yeah, and before I get there, I just want to add one other point about the previous phase and the acquisition of Montreal by the TSX, or them buying it back, as you said. I think that one of the elements that they were very, very concerned about is that we were having conversations with Montreal also, and then they decided to slam dunk it and pay a big ticket to make sure that there was not going to be an Alpha Montreal combination emerging out of that. And we were not at the stage that we were going to do it, but we definitely had some initial conversations. But then fast forwarding indeed to NEO, well,
actually, I'm sorry, I'm going to have to interrupt you there. Sorry, Jos, I really do. I know there's a little bit of lag on this line, but I'm seeing you well. But I have to, as a car person, point out the fact that the Alpha Montreal was originally debuted in 1967 on the island, on the Ile Notre Dame, because it was actually part of, I do believe, Expo 67. And there you were, barely 20-something years later, and you were discussing, or 30-something years later, you were discussing Alpha Montreal Exchange. That would have been interesting. Certainly the Alpha Montreal is absolutely magnificent sports car of its era, and a delight to drive if you happen to be lucky enough. Sorry, just had to add that there to the conversation for the petrol heads. Carry on. Tell us about the move towards NEO.
I think it's an important piece of information. I support that. So the Neo story, like of course, it takes you back to the LSE bit on the TMX group, and then the emergence of a group of Canadian financial institutions seeking to prevent it out of fear that it would be detrimental to the Canadian capital markets, the Canadian ecosystem. And one of the interesting parts of that entire process was that a number of the financial institutions financing or were financing that counterbid, that Canadian counterbid by the Maple Group, put as a condition that Alpha had to be part of the purchase because they wanted to see that element of competition that could reemerge in a multitude of ways not being there anymore and being integrated in the new group and create one single very strong Canadian entity that would have the cash markets, derivatives market, and also interestingly the clearinghouse, and I'm talking about the cash clearinghouse or the central securities settlement organization and depository organization. And when that happened, you go back. You may remember that, or I'm sure you remember that, Patrick. You go back in many of those discussions and thoughts that we spend a lot of time on in Europe about going vertical versus going horizontal in building your value proposition as an organization. Deutsche Börse was very vertical minded. Euronext was a bit more, or London Stock Exchange was definitely more vertical minded, that is integrating with multiple post service providers, clearing providers, and not just forcing everything to your single channel. And Canada took the approach of we want to own it all, and then we're going to be in a very strong position. Interesting thought, and I had discussions, of course, afterwards about staying or not staying with the organization. And what became clear to me is that it was not an organization for me. And what I truly believe is that there was a lot of vision, but there was in fact not much strategy behind it. And again, fast forward to today, and you see that many of the elements, like one of the big promises was we're going to integrate the central securities depository with the derivatives clearinghouse. When did it happen? 8 years further, 9 years further almost, and it still did not happen. So I think that for me it was clear that we would not execute upon it, that this was driven by a fear, by a concern about losing control over the capital markets. With hindsight, I think that Canada missed a very big opportunity to play a global role together with the LSE, if that would have gone ahead. And now it's not the case. But again, going then back to that period, seeing that it was not going to go in the right direction, seeing that it was all about reestablishing a monopoly that would be, at the end of the day, detrimental to the Canadian stakeholders of the capital markets. I had a discussion with partner in crime, I would say, at Royal, who was running global capital markets at that time, Greg Mills, and then he said, Jos, I think we should think about coming back with competition. Canada needs competition, and competition now is totally gone, and it's done in a way that is going to be detrimental to our industry. And I will always remember my first reaction. It was, look, I'm not interested in setting up another alternative trading system. Like if we do something, we have to do something more fundamental. And we have to look at the entire offering from an exchange perspective. And then he said to me, well, why don't you spend some time on writing a white paper? And what do you think should happen and what should be the type of exchange that we need in the Canadian market, which is what I did. And then I went away, left it with him to review it, to discuss it internally. He also wanted to have some external discussions, and I went away, believe it or not, to get married and go on a honeymoon and that was all for a couple of months. And then I came back and I said, "So how are things going?" And he said, "Well, I talked with two big buy-side institutions. They love the concept. They want to fund it, and they want to be founders of it." And then we talked to 8 other firms, and 5 of them immediately said, "Yes, we need competition. We need a different way of looking at the exchange business, and we need an approach, a model where the investor comes first, where the capital raisers comes first, where we care about the impact on the capital markets." And that's the big issue that we've seen with the entire evolution of exchanges moving into for-profit models. That is that, and I get it, they put the shareholder interest first. It's all about creating shareholder value, and then you forget about what is important for your core constituency, investors and capital raisers. And then it was particularly an issue in Canada because you are in a monopoly. So think about it. You have a monopoly that is for profit. And you can imagine that the loser in that scenario is always the client, the customer. And in our industry, that's the investor and that's the capital raiser. So that is where the entire vision of NEO comes from. And it may sound like motherhood and apple pie, but the idea of we're gonna do what is right, what is right for those stakeholders is what has driven us since the beginning. It was not always easy. We had parties coming to us saying, "Well, if you change that, we would trade more with you." We had parties coming to us saying, "If you change that, we may consider listing with you." But we always stuck to those values, and that is really what differentiates us. And we make one big bet. I always love to repeat that nowadays. We make one big bet, and I remember saying that to the shareholders. The bet we are making is, can you be commercially successful if you do what is right in the capital markets? And the answer is yes, you can. And we have demonstrated it. And now we're continuing to build on that. I think you're back on mute,
I am,
Patrick.
I haven't managed to grow a third arm. Production, please, can you try and keep up with my muting? There's a lot of background noise this evening. I'm sorry. That's a fantastic quotation, actually. It was really, really good. Can you be commercially successful if you do what is right in capital markets? And I think that's very, very apt indeed. I mean, it's really fascinating. And the message you're giving, I mean, clearly, it is an incredible balancing act in this day and age because you need to achieve a profit. But at the same time, surely, actually, the idea of just purely maximizing shareholder value is nonsensical, because actually what you've got to do is make sure that you're maximizing value for all of these multiple constituencies.
Correct. That is the fundamental message, and I think that there is more and more realization of that, in our society, and I think that only thinking about shareholder value is the old world, and you see that with the evolution around ESG. You see that in the way that investors and customers are reacting. Like, you need to think beyond maximizing shareholder value. You need to think about ultimately maximizing. You need to think about maximizing stakeholder value, but you also need to think about maximizing societal value. And our world is clearly moving in that direction. And I think that the ideas, the thoughts that we came with at that time put us on the right map, on the right direction for that. And I would say, when I look at things from a societal perspective, we are also an organization, and that's important to us, that wants to give back. So yes, we want to make sure we generate profits. It's important. It's important also for the sustainability, the growth, the further progress of our organization. We want to make sure that our stakeholders, the investors, the dealers, the advisors, the capital raisers, the fund manufacturers, that they have a good experience, that they achieve the objectives that they want to achieve by utilizing or leveraging a stock exchange. But we also want to make sure that when we are successful, that we support initiatives outside of our world. And NEO is in fact quite active, in a number of foundations, in a number of charities, different nature, acknowledging problems. Like one that I'm extremely excited about is fairly new and focused on helping women in our society. COVID has had a percentage-wise much bigger impact on women, and I think helping them to come back into the workforce, helping them to move into some new types of roles, getting into STEM, all kinds of things of that nature. I think that is great, and that is supporting our society, and you know what, and it's also going to be good for of course our economy, and it's going to be good for the capital markets, and it's probably going to be good for us at the end of the day. So you create a virtuous circle by thinking about the entire environment around you, and not just thinking about how do I maximize my profit.
Fascinating. Really great messages, and actually something I'm sure is going to be very exciting to women on it. I'm sure they're listening and watching this evening and going to be intrigued by the idea of how best to try and include, well, the 50% of the population that quite often are not working so well. I noticed this week that I do believe that 30% of companies in Ireland have, or 30% of leading Irish companies, their boards are consisting of women, which leaves them only a couple of percentage points ahead of Ghana right at the moment, which suggests that there's quite a lot of work to be done altogether. Yes, Women on It Hack the Future, say Women on It right on cue. There you go, they're typing quickly this evening. Don't forget you can catch Positivity Hacks Delivered with Women on It's Beata Young tomorrow at 6 p.m. on the Women on It channel on the same streams. You get that via LinkedIn, YouTube, and Facebook. I'm here this evening with the original serial exchange entrepreneur, Jos Schmitt. He is coming to us remarkably from the Cotswolds in the United Kingdom. We're talking about all sorts of markets. We've been talking about Alpha, his original entrepreneurial baby in Canada, although he had various other projects before that, of course. And then we moved on. At the moment, we're talking about NEO. And great to see, we've got a lovely comment there from Martin Watkins. Good to see you this evening, Martin. Thank you very much for being part of the show once again. Martin, of course, a guest on this IPO-VID live stream many months ago. Patrick Young, Jos Schmitt, absolutely the case, especially in the infrastructure world. A great quote, and he offers his best regards. And of course, the quotation to which he refers is, can you be commercially successful if you do what is right in capital markets? Yes. Well, that's a great message altogether. So when you're bringing in these different groups, stakeholders, and so on, explain to me, give us some of the ways in which NEO is unique for your market positioning.
Yeah, I could give you a couple of examples. Let's maybe start with our trading platform. So, remember what I said when we launched Alpha in 2008. We saw the evolution of new liquidity providers, HFT community. We were missing that in Canada, and we said, we need to bring that liquidity in our country also. One of the things that we have learned over the years at Alpha, but we've also seen it, in many other places in the world, that is that new type of liquidity provider can add a lot of value, but it can also, in certain circumstances, with certain strategies, be detrimental to the value that the market should be creating for an investor or for a listed company or a listed instrument. And you know, I often say we are very supportive of HFTs, but we are not supportive of certain strategies where speed is being used to the detriment of someone else. And what we did in our trading model, for example, is that we put in place some very unique mechanisms, such as a speed bump, such as some different matching priorities, such as making certain data components not available at the full granular level, to push back on what I would call predatory strategies. And as I said, what is great with that is if you do that, you can really unleash, of course, from the parties who want to play ball with you, but you can unleash incredible value and incredible liquidity provision from that community, and you avoid those who are trying, to take advantage from the long-term investor. Example number one. Example number two, in the market data space, believe it or not, but we took the decision at NEO not to charge any fees for retail investors. Market data fees are a big item of discussion worldwide, and who is most impacted? Of course, the retail investor, because it becomes a component, a cost that they need to bear. We took a decision that we were not going to charge fees for them. Is that something that we'll always say like that? I'm not going to proclaim I'm someone who would not reconsider that, but if we reconsider it, it will be in a totally different way than what you see other exchanges doing, which is how can we take control of that captive consumer and charge them as much as we can. Our view on charging fees is you have to charge an amount that corresponds to the value that you provide, and that should take into account, of course, your cost, and it should take into account a certain margin, but it cannot go in excess of the value that you provide. And I think that exchanges have been doing that globally. Third example, when it comes to listings, there again, we took a different approach. When an issuer comes to us, our discussion with them is not about this is what you need to do to list on our exchange. Our discussion with them is, one, are you sure you want to go public? Because these are the consequences. Two, these are the different ways you can go public. You can do an IPO. You can do what we call here an RTO, a reverse takeover on a shell. You can do a direct listing. You can leverage a SPAC or a similar vehicle. Explain to them what the options are, what the pros and the cons are. Then help them through the process. Make them understand, what it takes to have a successful and seamless process. When there's an issue or a challenge, not say, well, go and figure it out, but work with them, help them to find solutions, help them to understand how they can overcome that problem and get to that go public milestone, which is very key and very important for them. And then help them also in that entire process to realize that if you want to be successful once you are listed, because it's not enough to be publicly listed, you're not going to suddenly see investors and liquidity, emerging out of nowhere. Make them understand what is important on how to generate liquidity in your stock, having the right market makers, liquidity providers that are going to support you, having other parties that are going to support the liquidity. Help them in understanding what it takes to reach out to investors. Investor awareness is critical. We live in a world where there's so much noise, where there's so much information hitting us, and where companies, across the world are using all kinds of channels to try to put themselves forward. Well, you have to help them to get a signal in all that noise that is going to hit the investors. And you need to hit the institutional investor, you need to hit the financial advisors, you need to hit the small and medium size buy side, the family offices, you need to hit the retail, and there's ways and techniques to do that. We explain, we help, we introduce them to partners that have proven to be successful in the past. We help them to understand what it takes if you want, an efficient solution in other parts of the world and get access in an efficient way to investors in other parts. Some decisions that you need to make, some presence that you need to develop. And I think that is something that you will not see. And then once they are listed, we continue to interact with them. Like one couple of items that I'll be very honest with you, and again, it comes back to doing what is right, that drives me crazy, is when I see pump and dump, when I see short selling taking place in markets. And the pump and dump scenario, we minimize, or we don't. I hope, fingers crossed, that we haven't seen it on NEO, because we are a senior exchange, so we don't list venture companies where that is much more prevalent. But we also very outspoken about it. And we're supporting some regulations that are coming out of British Columbia today to help managing that and to try to prevent it, because we still see quite a bit of that in our market, but also predatory short selling. We see companies, that are publicly listed and are suddenly subject to absolutely inadequate short selling. And I'm not, again, anti-short selling. I think that's part of the markets. It's information that leads to better price formation. But when the short selling is driven by the fact that I have better information than everyone else, that I know something that no one else knows, it becomes a very big problem. And by the way, I would not call it short selling anymore. I'd probably call it insider trading. And we are the only exchange in Canada that is keeping an eye on that and is, to put it very bluntly, introducing information and providing data to the regulators. We only do it for our own listed securities, of course, where we tell them, look, we are seeing here a very bizarre pattern that tells us that something is going on which is not appropriate. We do that for our issuers. I don't know if you know of any other exchange doing that. I can definitely tell you, not in Canada, but I don't know any exchange doing that in the world. We do that. If we see that liquidity is not emerging the way that it should be, well, we engage with them and we have another discussion about, if have you worked on this? Have you looked at that? So those are the things that we do, and I think that make us very unique. And ultimately, that is the beauty of it. Coming back to the earlier quote, that is that it makes us unique. It has differentiated us from everyone else, and now it is creating a recognition. And like always, I've been through it a few times indeed, as we discussed, like starting an exchange, the trading business, getting your data everywhere, getting your first listing. It's tough, it's hard. You can have a good story. I can tell this. I told the same story, 5 years ago. Didn't manage to get one listing on the exchange, and then suddenly you break through. You break through with, an issuer that suddenly shows success, and leverages all those means that we make available to them. Other parties see it and they go like, wow, it works. So it was not just words, it works, and then it accelerates. And today, we are over 120 ETFs. We have 42, 43 corporates, and we're talking about companies like the average market cap now is around 300-400 million, with some that are at 1.5, 1.6, and so on. Acceleration, we see continuous acceleration. The pipeline is bigger than it has ever been. And why do they come to us? Because of that, integrated value proposition, which is about doing what is right for them. And that is really today our differentiator. And that is upon what we continue to build, and we're doing many other things, but that gives you a long answer to a question about what makes you different.
No, it's fascinating altogether, but ultimately you're building an integrated value proposition, which is exactly what you said at the end. I think it's fascinating what you're talking about, the breakdown of data that you're giving to listed companies. I am not aware of an exchange that actually is doing that. I think it's also very interesting what you talk about in terms of predatory market making. I mean, I think there are some things in the event of, for example, yes, front running and insider dealing, which is a problem whether or not you have high frequency trading. I think also there can be some issues where particular markets allow essentially you can have unlimited short positions amongst the market makers, which is now leading to a certain degree of market maker abuse because they simply spend all of the time making their money by being allowed to themselves become incredibly aggressive shorts on certain companies and certain small equity markets, which is always a challenge as well. There are so many aspects to this that become very, very interesting. One aspect which we haven't touched upon yet, we're going to jump to in a question right now, because we've got a question from Simon Huckle. Good evening, Jos. Enjoy the Cotswolds. I'm there myself tomorrow. Brilliant to hear your thoughts on exchanges. I'd like to know, what do you think of crypto and digital assets?
Yeah. So it's an interesting question. It's one of those where if you have an opinion, you will never please everyone. And I do have an opinion, as you would imagine. So I would say that I'm a very big believer in blockchain technology. It is having an impact on our world today, and that impact is nothing compared to what it's going to be in 5 to 10 years. And it's all taking longer than everyone was saying at the beginning, because it takes time. Like when you think about the financial markets, it's an extremely complex integrated system built over decades and decades and decades, comes with a lot of risk, and you cannot just eliminate that in a couple of years. So you need to transition, you need to migrate. Now, that is not really an answer to crypto, and well, it's indirectly an answer to crypto and digital assets. So when you then look at crypto and digital assets, I believe a lot in those currencies that will enable the world of tomorrow. So in other words, I could say I'm a big believer in DeFi protocols, and as we all know, Ether is a bit the father of that all those protocols that we see over there. So I'm a believer in Ether because I see the value that it's bringing and is going to bring to financial markets and to our society overall, in the way that it allows to really enable new functions, new ways of operating, new processes. If I then look at something like Bitcoin, I am not convinced. When we say that this is, a new store of value, this is the new gold, I'm struggling with it. I got to admit now, maybe I wish I would have invested a couple of $100, whatever, 10 years ago or 8 years ago, and it would make for me personally a big difference. But I don't see what it is bringing to our society. I do see some of the downsides, by the way, in the way that the entire mining process is taking place, and we all know what I'm talking about and how expensive it is to our society. So a believer on one side of all those currencies, those cryptocurrencies, those protocols that will enable decentralized finance, because that is happening, and it will just take time, and you have to be ready for it. Not a big believer in those who say that this is a new value store on its own. So that's not the way that I would look at it. And there are some people investing in DeFi protocols, in Ether, with that spirit of this is replacing what the value store is of today. This is replacing the currencies of today. No, I don't believe in that. I believe in what is going to enable our new world, our world of tomorrow. So that is where I would be. And then trading those assets, trading securities through the form of digital assets, in a tokenized form. Again, I think that absolutely that's the way the world is going to evolve. Again, I give it that 5 to 10 year period ahead of us before it really starts to become meaningful. I see companies that are leveraging some of the biggest platforms out there today, and who see their securities that are listed on the one side, but are also traded on those platforms, and you see that it's not very meaningful yet. It's not yet representing a lot from a liquidity or value traded or volume traded perspective, but it shows you where we go, because we all can immediately imagine and see the benefits. Think about trading, a security under the form of a digital asset that is then afterwards settled real time, leveraging a cryptocurrency, and we all can imagine the capital that would unlock, versus a world where we are living in a T+2 fashion, where settlement is delayed by a couple of days, because of the way that our models work, that our systems are integrated. So incredible potential ahead of us. It is going to happen. It's going to take a little bit more time, and where the focus has to be, and how many use cases have we all seen or heard about, like, this is going to change the world, and this is going to change the world. Where the focus has to be is not on, and now we're building the brave new world and everyone's going to come to it, because they don't. Like, a number of people are coming to it, but they don't. It has to be built in a way where you come with your new solution, but you look also at how do you build the bridges with today's world. I call it a bit the analog world. It's not because it's analog, but the analog world and the digital world need to be bridged, so that we then enable a transition from the one to the other one, a transition that will be smooth, a transition that will be far less risky than facing a revolution. So what I'm talking about is an evolution. And let's remember something. And a lot of people, again, forget that when they come with all the great ideas. I'm not saying that the ideas are wrong, but there's something that they forget. That is, the assets today are still in the analog system. So you need to be able to link them to that new world. You need to be able to link them to those new solutions. They're not suddenly gonna, evaporate out of the banks, out of the wealth managers, and suddenly emerge, in cold storage, and then be available for trading or services, enabled by blockchain. I think you need to build those bridges, and it's a matter of time. It's going to happen, and the transition is key. And that, by the way, is also one of the things that I find very exciting. And sorry, Patrick, I'm going to jump ahead on something. It's one of the things that I find very exciting in some of our discussions with SIBO, because we have today's world, but we also have a digital asset platform. And imagine, thinking about what I just said, how you can leverage those in a very interesting way to achieve that evolution rather than that revolution.
Really fascinating. I mean, really, really fascinating, the whole issue of the digital world and so on. I'm going to get to Martin Watkins' question in just a second. One thing that interests me, though, is you glossed over twice. You said DeFi protocols, really, really exciting. Now, I think we're probably in heated agreement here, but Give me a little bit of granularity in that, because I'm not entirely convinced that we're suddenly going to turn the world upside down and everything's going to be totally decentralized, and therefore it's going to manage to rip the heart out of essentially the entire legal, regulatory, and financial establishment.
Yeah, but it takes us back to what I said earlier. Like, that change is gonna take time. That change needs to be accompanied by the right regulatory mechanisms and processes and oversight. When I look at all those platforms that are out there, the ones that excite me are the ones that have a regulatory oversight component to them. Canada has played there a very exciting role. So the Canadian Securities Administrators, despite all the complexity of our regulatory environment, came with a position, with some guidance. If you want to trade cryptocurrency in Canada, you need to be registered. And then, depending on what the nature of your platform is, you have different levels of registrations, and that is being worked out. Well, doesn't it feel good to look at a platform like that and be able to say, here I operate on a platform that has been validated, reviewed by a securities regulator? I think those elements are emerging, are growing. We're going to see some serious stuff happening in the US also in the nearby future. And that is going to further accelerate the adoption of those new solutions. Now, is everything going to be decentralized tomorrow? I think it's again, it's an evolutionary process. But the one thing I know about DeFi protocols, Patrick, is that they are the ones that are designed and built to enable a new financial model. Is that financial model going to be, applicable everywhere and for everything? Are all services going to be decentralized? Are we going to lose any form of centralization? No, I don't think we're gonna totally eliminate centralizations. Think about the world that is totally decentralized. Who's going to take the role of, I don't know, central bank? Like you're going to need some roles to be played over there, but expect them to come out with their cryptocurrency and leverage that to fuel the system also. So you're gonna keep roles that are central roles that are going to be necessary to regulate, to police, to administer some of the activities in that financial system. But many other roles can be eliminated, and you're not going to, again, eliminate all. We're not living in a binary world where, again, you go from black to white or white to black, whatever view you have on the crypto world. But you're going to see it evolving. And I believe in those protocols that are there to support those new models of tomorrow. I don't believe in those that are being created because we're gonna create demand. There's going to be demand in it, and it's going to become a value store. So that's the big difference for me between the two.
I think that's a totally valid pointer. And actually, it leads us into our final question this evening from the audience. Thank you, Martin Watkins. Do you believe regulations will keep up with the adoption of digital securities, e.g. MiFID in Europe, or will there be regulatory arbitrage?
Yeah, well, nothing new in the world there, I guess. And in fact, there's two questions here instead of one. Will the regulators be able to keep up? Well, the reality is, and this is not me being negative about regulators, because boy, it's not an easy job. I can tell you that. And I'm part of those who once in a while complains about them, but then at the same time, we'll go back afterwards and say, sorry, I shouldn't, because I understand how tough it is to do what you do, to keep up with a world that keeps going faster and faster and faster, and where there are so many more other people always looking at, what's the next idea? How can I innovate? How can I do things in a different way? So it's not an easy world. And the answer to the first question, can they keep up? they will always be a little bit behind. That's the reality. And, we've seen it in the entire crypto space. They're starting now to catch up, and they're starting to emerge, and they're starting to try to put some order in what is a pretty Wild West environment. And is that new? No, I think it has always been like that. That is the way that the world operates. You got a period of Wild West, and then the sheriff comes into town, and slowly things get normalized. But then at the same moment, it's probably another Wild West starting somewhere else that they will have to look at afterwards. So keeping up, no, but catching up at one moment, yes. And that is what I see happening today. Arbitrage, it always happens. There's always going to be opportunities for that, and people are going to play it, but it's going to be particularly easy and applicable in the earlier stages, where you have a country like Canada that comes with a certain number of regulatory constraints now on that space, and organizations are going to say, well, you know what, who wants to operate in Canada? We don't do it over there. We don't service their clients, and we're going to establish ourselves where we can do it. And that will work for a certain amount of time. But the problem that regulatory arbitrage always faces is that over time, when everyone is starting to catch up, those who have caught up, those who are coordinated, and think about that within the frame of an IOSCO, wherever you want to think about that, where that coordination takes place, they're going to start to isolate those entities and those jurisdictions that are not putting in place the right legislation and the right regulations around those services. So it will work for a certain amount of time in the earlier stages. It will work when regulation is starting to emerge in more and more places, but then at one moment it's going to become something that is not sustainable. So I'm an optimist. I'm a believer in regulation. I guess you figured that out, and I think it's important. It's so easy to abuse investors.
Yeah.
So it is critical, and I'm also a believer that it at the end of the day it is the winner. Some people will sadly enough suffer from the absence of it or regulatory arbitrage in the meantime, and the companies that do that, the companies that do not want to expose themselves to proper regulation, I think, is companies that I, as a customer, or I as an investor, will absolutely ignore. And I hope and I wish that I saw more people doing that.
Yes, I think you're absolutely right. I mean, it's a vital, important precept for everything. And indeed, I mean, good grief, 60 minutes have already more than elapsed, Jos. We're just having such a fascinating conversation. Thank you very much, Martin Watkins, for that question about regulation. I suppose really, therefore, why don't we try and wrap this up? I mean, there's one question. Well, actually, there are two questions I'm itching to ask you. Our nowadays standard final question of where does the capital market revolution go next? And I have to say, does it include Alpha Mark III?
Oh God, I love your last question. It's I think it's becoming a little bit part of our history together. But where the capital market's going, what I see today, and I'll give you a couple of examples. What I see today is that the innovation economy is creating a totally new ballgame. If you go back 20 years, remember when NYSE bought Euronext. Some of you may remember that. And it was all about, we're going to create something, cross-Atlantic, and it's going to be good for the investors, it's going to be good for the companies. And they started to list the first few, I think it was French companies, a part of Euronext Group in New York. And it didn't work. there was no interest. In those days, we were still, and that's only 20 years ago, we were still in a regional view of life where I invest in my region, I invest in what is close to me, I invest in kind of what I can touch and where I can get information while I'm awake, probably, and where the market participants and the liquidity providers are there and can participate during the normal trading day. In those 20 years, the world evolved and the innovation economy has accelerated. And if you look at the innovation economy, where we are fundamentally revisiting business models, where technology is no longer a component of, I got my labor, I got my resources, I got my technology, and I put all of that together. No, technology is becoming fundamentally a game changer in the way that businesses are being operated, proposed, made available. What you see is that those companies attract interest and investors from across the globe. I see that with NEO. So NEO has really been focusing on establishing itself in Canada as the exchange of the innovation economy. And when we list companies, we have Canadian interest, we have American interest, but we have interest out of Europe, we have interest out of Asia, we have interest out of Australia, and it's still pretty complex, but that interest is there, and that is very important also for those companies, because the capital they need to build those new models, it's not a simple incremental build of one piece on each other. You need to make some major investments to develop those new solutions. So you need to have access to much more capital. You need to have access to the global capital pools. So the world has been evolving from a world that was regional, where capital was a regional concept, to a world where capital really became global. That is the biggest difference that I see in where we are today and how we have evolved. But our infrastructure, if you look at the infrastructure of the capital markets, that infrastructure is still very regional. And no, it's not going to be a problem for a big institutional investor in Asia to invest in a company in Canada, but it starts to become more difficult for the wealth channels. It starts to become very difficult for the retail channels. And where I see our world evolving is in making that much more seamless. That is, make the global access or the global allocation of capital much more seamless. And you know what? This is one of the very, very key opportunities in our new relationship, as you know, with Cboe, that we can work on, and where, in my eyes, as part of that entity, as part of that group, we will not seek to compete just with the TSX. We will seek to compete with the powerhouses of this world, like NASDAQ and NYSE, because no one really tackled that issue yet today. Is there going to be an Alpha 3? So for those who don't know, those who followed it, I think that Patrick criticized TMX for not having a proper, or long enough, I should say, a mechanism in place to prevent me from doing something else in the area, and then was hoping that Cboe had a good non-compete in place with me. But the answer is no. There's not going to be a number 3, and the reason there's not going to be a number 3 is that I am so excited about the opportunities that I see ahead of us with Cboe, and I want to execute upon those. So I don't only want to say words and talk about what is possible and what we should be doing and what we could be doing. I want to make it happen, and I want to be part of an organization that wants to make that happen. And guess what? I'm just as excited as I always am about starting a new adventure, and it's going to be, trust me, an exciting one, and it's also going to be one where we're going to do what is right.
And on that note, and let me just add that it was in no way a criticism of you, Jos. I was delighted that TMX were foolish enough to let you back on the Bay Street within a matter of days or weeks. Certainly it didn't feel like months to get on with Alpha 2. It was a really good thing. I merely thought it was a little naive of them to let their ace competitor suddenly back outside to go and work on something new. But nonetheless, adding societal value as a serial entrepreneur, this has been an incredible chat. We have run over time, ladies and gentlemen, but I can see from the comments it's been absolutely fantastic. Simon Huckle, regulation is key. Many thanks for your answer to my question. Thank you, Peter Secon. Good to see you this evening as well. Great comment from Robin A. Ranson. Thank you very much. An excellent hour of sharing and learning. Thank you, Jos and Patrick. You're very, very welcome. Similarly, Robert Brown, wonderful interview. Thank you, I see from him. Good to see you as always from Clearing and Settlement in the United States of America. Thank you to everybody who's asked questions or made comments this evening. Peter Second, Craig Richardson, Simon Huckle. I hope you enjoy the drive to the Cotswolds tomorrow. Les Calvert, Rebecca Hoskins, Martin Watkins, Anthony Clancy, and indeed those last two excellent commentators are Robert Brown and Robin Ranson. It's been a joy to have you all together. We need to create something where the investor comes first, where the issuer comes first, where the whole ecosystem benefits rather than simply a race to endless shareholder value. That was one of many fabulously powerful messages to come out today. And who knows this better than Jos Schmitt, because he's built actually more successful marketplaces over the course of time and then ended up selling them on than pretty much anybody we could get on this show, ladies and gentlemen. I mean, at least 3 venues down so far. And this one's looking very exciting with the sale to SIBO. I'm really, in one way, disappointed, but another way, very excited to hear that there's not going to be an Alpha Mark III, because I think what you can do with SIBO is going to be fascinating. And indeed, we didn't even get a chance to talk about SIBO because SIBO have the world's biggest network of stock trading across the world, bigger than NASDAQ, broader than the Intercontinental Exchange and NYSE, way larger than European champions such as Deutsche Börse and Euronext, large as they may be, but truly covering the globe after a series of fascinating acquisitions during the course of this past year. Gosh, so much we could be talking about. Ladies and gentlemen, we started this year at only IPO-VID number 15. We're going to exit it with IPO-VID number 49. Thank you to Mark Makepeace, who was our first guest of the year, and everybody else who's come on the show ever since, including Jos Schmitt this evening, our serial entrepreneurial guest, to take us into the festive mood with some hugely thought-provoking and fascinating comments. And indeed, I could not agree more. Peter Secon saying once again, regulation is key, no matter where you are, no matter what you believe about decentralized protocols, no matter what you're looking to do in terms of whatever that product may be. Ladies and gentlemen, my name is Patrick L. Young. I want to say it's the festive season. To all those of you who are not celebrating, we operate on an entirely inclusive basis, and we will be delighted to wish you a very happy whatever festival you would like during the course of the next year. But for us, it's vitally important to say, and there was a graphic on my screen just a few seconds ago, but it seems to have disappeared again. Merry Christmas, ladies and gentlemen, in life, blockchain, and markets is what I have to say. May your new year be judiciously distributed in equal measures of health, wealth, prosperity, and indeed altogether good fortune. And let's look forward to next year when finally Omicron, I do believe, is the vestige of this horrible Wu flu that is going to finally be across, over and finished for all of us. What an exciting year in prospect. And I don't just mean the idea of NEO now being part of SIBO. That's going to be a thriller altogether, ladies and gentlemen. My name is Patrick L. Young, Executive Director of Valerian Blockchain, publisher of Exchange Invest. And on Tuesdays during the course of the year, we're going to be back in the early part of January with our next IPO-VID guest. Ladies and gentlemen, Martin Watkins, all the best to you too. Jos Schmitt, thank you very much. I hope you have a wonderful festive season, ladies and gentlemen, and Happy New Year.
you.